Hi guys, welcome and bienvenue on the channel. Here on The Rest is Income we talk dividends, cash flow and passive income. Today's video is a bit special. I ask artificial intelligence to build me the best passive income portfolio. Yes, I ask an AI which assets to buy, what strategy to follow and how to maximize passive income. And then I ask the opposite. Build me a growth portfolio for someone with a 20 to 25 years horizon. Were the results accurate? I'm not gonna spoil it, but the answer is surprising. So stay tuned until the end to see the portfolio and my personal investor conclusion. Let's go. Why an income portfolio? Before asking AI, let's remember why income investing matters, or in this case for me. The goal is simple: generate passive income consistently and sustainably. Dividends, bonds, real estate, even crypto maybe. Unlike growth investors who only focus on portfolio valuation, income investors focus on cash flow. So the real question is, can AI build a better income portfolio than us? So what I ask the AI, here are the exact questions I gave the AI. What are the best assets for passive income? I want the tickers. How do we split capital between stocks, bonds, real estate, and ETFs? And build me two income portfolios, one with US ETFs and one with European distributing ETFs. Because for those who don't know, with distributing ETFs, the dividend or the interest are paid out to the investor instead of accumulating that are invested within the fund. I also ask AI a target yield on cost of 4.5% or more and to backtest it to see if it works. And finally, what is the ideal cash flow portfolio over 5 years? And after that, I added the opposite bonus question. Build me a pure growth portfolio for 20 to 25 years. So let's check what the AI recommended. For individual stocks, that's what I get suggested. The energy sector: Total Energy, Chevron, BP, Shell. Pharmaceutical: Novartis, Sanofi, AbbVie. Consumer staples: Unilever, Nestle, British Tobacco, Altria. Communication: Verizon, AT&T. MLPs: Enterprise Products, EPD, but not for European investors here because of the special taxes for the non-US residents. Financials: Allianz, and when I ask for bigger yields, RS Capital. Now the ETFs for the US investors, much more than others: SCHD, JP, VYM, and in a lesser extent IDV, SPHD. Nothing on Devo from Amplify or HDV from iShares, for example. Plus sector ETFs like XLE for energy and XLU for utilities, of course. Covered calls also, the Global X one, XYLD, QYLD, the JP Morgan ones, JEPQ, of course. On the other hand, despite a request for the high yield area, mainly under 20% in this case, nothing on the NEOS funds like SPYI or QQQI, or the same as the JP Morgan Series 1 from Goldman Sachs, ticker GPIX and GPIQ. And for ETFs for European investors, the UCITS ones, first by a long shot, it's VHYL. Then was quoted ZPRG, IDVY. Again, the Global X ones, XYLD and QYLD, and the JP Morgan ones, JP and JEPQ. But no quote for TDIV or VDIV, for example. For bonds, we had government and corporate investment grade with short duration ones for recommended. For real estate, REITs. For single stock, we have, of course, Realty Income, but no other triple net lease. For the ETFs, VNQ for the US guys, and IWDP for European ones. And what about our bonus question, or growth portfolio with a 25-year horizon? So for the growth stocks selected, First answer, I had Tesla, Meta, CrowdStrike, Shopify. Then another suggestion, we had Microsoft, Amazon, Eli Lilly, Visa. For the US growth ETFs, we have VOO, QQQ, and QQQM, IWM, VGT. For European growth ETFs, we have VUAA, SXR8, EQQQ, VWCE, IWDA. Okay, so after seeing those portfolios and those tickers, I ask myself, how and why AI make those choices? What AI does, it's simple. It looks at thousands of data points in seconds. It doesn't get emotional, it just follows the numbers. For income portfolios, AI automatically favors stability. For growth portfolios, AI gravitates toward innovation and exponential revenue. And that's the superpower of AI. It sees patterns we don't. But here's the twist, guys. AI has limits. AI can analyze the past, but it cannot predict the future. It doesn't know your goals, it doesn't know your taxes, and it doesn't know your risk tolerance. AI can build the plan, but only you can stick to it. There's something AI will never replace, not yet: investor psychology. An ETF doesn't pay you dividends if you panic sell during a crash. You know what happens in a bear market? The fear takes over. Social network screams recession. Your portfolio is going to be down minus 20% or more, and suddenly passive income doesn't feel so passive. Nothing feels passive, not even growth assets. AI doesn't feel fair. Humans, we freak out. You know the difference between a millionaire portfolio and a regret story? It's not which stock you pick or when, it's whether you stay invested when it's uncomfortable. AI can select assets, only you can provide discipline. And that is what makes you the investor. So, do I agree with AI? Yes. The selected assets are solid, diversification was done automatically, the CAGR, which is the compounded annual growth rate, and the backtest were done without me asking. But AI tends to favor older ETFs with longer history. Results seems to depend on the version of the AI, so if you use AI to build a real strategy, or else, a paid version for a better trained AI engine may be worth considering. What would I do? This is not financial advice here, just me giving my thoughts. So for income investors, I would put 40% on dividends ETF like a MSCI World or a S&P or a Eurozone ETF, 20 to 30% on covered call ETFs to boost my income, 10 to 15% in REITs and BDCs, and only for US investors, I would add MLPs and closed-end fund inside. And of course, keep 5 to 10% in cash for opportunities. And for European investors, I will use distributing ETFs in tax advantage accounts, and if you're accumulating ETFs in taxable ones. For growth investors, I would focus on growth ETFs, and why not select a few stocks in small proportion in which you have high convictions to be the next 10 bagger. Go high exposure to tech, and most importantly, I would rebalance regularly. Yes, AI gives a great foundation and is a great tool. AI can build a portfolio, but you are the investor. The human makes the decisions. Would you trust AI to build your retirement or growth portfolio? Tell me in the comments. Like, subscribe, and hit the bell for more dividend and passive income videos. See you next, guys, and happy investing. Merci et au revoir.